What happened to Meta last week, and my response to it, expressed in meme form. In 2018, the market was panicking about Facebook's slowing revenue and growing expenses, and was concerned about the negative impact that Stories was having on Facebook's feed advertising business. Lens 1 was Facebook's finances, which did show troubling trends in terms of revenue and expense growth. Lens 2 was Facebook's products, where I argued that investors were over-indexed on Facebook the app and were ignoring Instagram's growth potential, and, in the very long run, WhatsApp. Lens 3 was Facebook's advertising infrastructure, which I argued was very underrated, and which would provide a platform for dramatically scaling Instagram monetization in particular. Lens 4 was Facebook's moats, including its network, scaled advertising product, and investments in security and content review. Lens 5 was Facebook's raison d'etre, connecting people, where I made the argument that the company's core competency was in addressing a human desire that wasn't going anywhere. The optimism proved prescient, at least for the next 3 years. Facebook's stock price increased by 118% between the day I wrote that article, before peaking on September 15, 2021. Over the past year, though, things have certainly gone in the opposite direction. Meta, nay Facebook, is now, incredibly enough, worth 42% less than it was when I wrote Facebook Lenses, hitting levels not seen since January 2016. It seems the company's many critics are finally right. Facebook is dying, for real this time. The problem is that the evidence just doesn't support this point of view. Myth 1. Users are deserting Facebook. The problem with this narrative is that Meta is still adding users. The company is up to 2.93 billion daily active users, DAUs, an increase of 50 million, and 3.71 billion monthly active users, MAUs, an increase of 60 million. Moreover, this isn't all Instagram and WhatsApp. Facebook itself increased its DAUs by 16 million, to 1.98 billion, and its MAUs by 24 million, to 2.96 billion. This goes back to my fifth lens. Facebook does connect people, and that connection is still meaningful enough for a whole lot of people to continue to use its services, and there is no sign of that desire for connection disappearing or shifting to other apps. Myth 2. Instagram engagement is plummeting. The obvious retort is that sure, users may occasionally open Meta's apps when they are bored, but they are spending most of their time in other apps like TikTok, and that time is coming at the expense of Meta's apps, particularly Instagram. Again, TikTok usage is certainly usage that Meta would prefer happen on their platforms. What seems clear, though, is that short-form videos are growing the overall market for user-generated content. In other words, TikTok isn't eating Meta's usage, but rather growing the overall pie, and, to be clear, taking more of that pie than Meta is, at least until recently. Myth 3. TikTok is dominating. It is frustrating to not know exactly how big that new pie is, or what Meta's share is relative to TikTok, but the company offered more evidence in line with my takeaway last quarter that Meta has contained the TikTok threat. First, according to Sensor Tower data as reported by Morgan Stanley, TikTok usage appears to be plateauing. Second, Reels usage is still growing, Zuckerberg said on the earnings call. It's fair to be a bit skeptical about that number, particularly as auto-playing Reels take over more of both the Facebook and Instagram feeds. What is perhaps more meaningful is the fact that Reels now has a $3 billion annual run rate, despite the fact it doesn't monetize nearly as well as Meta's other ad formats, for now, anyways. Third, the fact that Reels usage is incremental to time spent on Meta apps supports the argument above that short-form video is growing the pie for user-generated content. To be sure, all of that TikTok usage is probably the equivalent of tens of billions of revenue if Meta could harvest it, but once again the evidence suggests that the cost of TikTok to Meta is, at least for now, opportunity cost, not actual infringement on the company's business. What it did not do, though, was kill digital advertising. Moreover, the fact that number was barely down year over year speaks to the fact that digital advertising is still growing strongly. Yes, it lopped off a big chunk of revenue, but it is not as if Meta revenue actually decreased by $10 billion annually. There is an analogy here to how short-form video has increased the share of time of user-generated content, as opposed to taking time away from Meta. Meta, of course, is not standing still, either. SKAD Network 4 has seen Apple retreat from its most extreme positions with a new ad API that should help larger advertisers in particular. Meta is meanwhile working to move more conversions onto their own platform, which magically makes that data allowable as far as Apple is concerned, even though there is no meaningful difference for merchants beyond losing that much more control of their business. It's also notable that the company's click-to-message advertising product is itself on a $9 billion run rate, and growing fast. Myth 5. Meta's spending is a waste. That revenue and expenses graph I posted in 2018 does look a lot more hairy today. There is some increased capital intensity that comes with moving more of our infrastructure to AI. Moreover, the same approach will be essential to Reel's continued growth. It is massively more difficult to recommend content from across the entire network than only from your friends and family, particularly because Meta plans to recommend not just video but also media of all types, and intersperse it with content you care about. In the long run, though, this investment should pay off. First, there are the benefits to better targeting and better recommendations I just described, which should restart revenue growth. That last point is perhaps the most important. It hurt Meta more than any other company, because it already had by far the largest and most finely tuned ad business, but in the long run it should deepen Meta's moat. May be true. The metaverse is a waste of time and money.